Well, the S&P may have hit 3,000 today, but our next guest says don't get too used to these record highs. They won't last long. Let's bring in Scott Wren, Senior Global Equity Strategist at Wells Fargo. Scott, great to have you with us.
Hi, Melissa.
The market got exactly what it wanted.
It did.
Yeah, so why wouldn't there be upside here?
Well, for us, and I think we could be in the very early stages of some chasing here. And typically, when you're later in the cycle, the chasing, once it really kicks in, I mean, that takes you to the high. But in the intermediate term, what we've done the last couple of months, and I talked with you guys about this the last time I was on the show, was we've lightened up. We have been leaning hard towards stocks for years. We backed up. We took a little money off the table. We put a little money in some short-term bonds, at least temporarily. We're willing to give up a little upside here, but for us, we think there's going to be a trade deal. We think it's pretty far out into the future. Probably, we think we're going to see some negative trade headlines here in coming months. So we're not convinced that it's up and away, but certainly the action. The technicals, we're getting a little bit of chasing here, and certainly it wouldn't surprise us if the market moved a little bit higher.
What do you think is the downside catalyst? What is that major catalyst?
Well, I think it's trade.
Downside?
It's global growth and trade. You got 40% of the S&P revenues coming from outside the country. Our concern has been global growth. The trade frictions certainly play into that. So, right now it seems to us that, we have a sector lean on. In other words, we're not completely neutral. We're in it. We like consumer discretionary and industrials and technology, financials, those kinds of things. But, in the near term, it seems like good trade news. A bunch of it's priced into the market, not all of it, but enough of it. It seems like right now you get some trade headlines, and the market's going to trade down to that. Now, of course, we got the 200-day moving average, a couple of 100 points in the S&P below here. So, you got to give your position a little bit of time to breathe here, because certainly we could trade down on negative trade headlines and still be in an uptrend.
Hey, Scott, it's Tim. So we're talking a lot of top down. Give me the bottom up. We've got earnings starting next week. You said you've got a sector lean. Talked a little bit about some of the consumer names. Where do you expect maybe really just some upside in a world where nobody's expecting guidance to be good?
No, I don't think it will probably be, Tim, because, there's none of these companies, especially these ones that are reliant upon trade and global growth. And, these guys are not going to go out on a limb and say, hey, everything's great. They're going to be cautious. And so I think the last time I looked at consensus was, down 2-3%, something like that year over year. We're at flat, which, obviously that's a poor result too. But I think really the market knows first quarter earnings were going to be lousy. They know second quarter earnings are going to be lousy. And really, I think when we look ahead, it's these macro issues. We know the Fed is not going to tighten rates, so the Fed to some extent is on our side at least. But it's this global growth story, and it's this trade friction story, which, let's face it, we've had a lot of back and forth in trade negotiations. We could certainly see some negatives before the positives. And right now for us, after this big run, we're up 27% from the Christmas Eve low. We thought taking a few chips off the table was probably a little prudent.
Scott, always great to speak with you. Thank you.
All right. Thanks, guys.
Scott Wren, Wells Fargo. Pete, I toss it back to you. To Scott's point, can the Fed outweigh the impact of trade on S&P 500 earnings?
Oh, boy. It's a great question. I don't know that I have the answer.
Isn't that the crux of everything, of a call to 3,500? You have to believe.
Yeah, and that wasn't my call, by the way.
Okay, but to believe that the markets go higher.
Right. Well, I would say this. It was interesting because when you really go through the testimony today, how many times did he use the word uncertainty? So I think that's still right. And so because of that, I still think that's one of the biggest factors that are there. Now, is it a trading market? It continues to be a trading market. I think it's been a great trading market. Matter of fact, some of the stuff that I was putting on just yesterday, I was taking off today. That's how actively fast things are moving right now. So we've got a great trading environment right now. Investing-wise, I think it's a lot more difficult because some of these names, they are pushing to the upside, and they do seem like the valuations are getting a little bit stretched.
So it's interesting to bring up trade. It's important. So the president, I'm not saying he's watching right now, although we know he watches.
But he does watch this show.
Record day for the market.
Exactly.
He's watching. We want to say hi. With that said, now he's got a dovish Fed in his back pocket, theoretically, a stock market at all-time highs. In his mind, I think, he says now he has some ammunition.
He has leeway, too.
To play hardball with the Chinese in terms of the trade. So I actually think this works to the opposite to get a trade deal done. It actually works to the detriment of a deal, which at a certain point, back to Scott's point, is probably negative.
We got those comments on Huawei 2 nights ago, which were on the eve of Powell coming in there and giving some more gas to the fire. So I agree with you, Guy, because I do think this is a case where there's a very delicate balancing act between your political constituency. Fighting China right now is politically very popular. It's bipartisan, and to that extent, going into a season that you've actually stood up to the guy that people think globally is the biggest issue for this country is very important. That's not going to let up.